Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my weekly thoughts on market happenings for the week ending May 20th, 2022. Looking at the indexes for the week, the TSX was actually up slightly, but the Russell 2000, S&P 500, NASDAQ, and Dow Jones were all down after a volatile week. Oil and gold were up once again for the week. During the week, the S&P 500 approached a bear market, being close to 20% down from a recent high. The NASDAQ had already hit 20% down and more some time ago. The market is having anxiety because the previous 3 calendar years, the S&P had huge 27% average annual returns because of the 0% interest rates, huge liquidity, and free money from the government. And this has been or is being taken away, causing profit taking and a little bit of panic. There is stock repricing happening to expensive stocks that enjoyed PE multiple expansion during COVID, or didn't have a PE at all because they weren't profitable. The higher interest rates and reopening is causing them to lose value. Canada reported its CPI on Wednesday at 6.8% year over year for April. Consensus from economists was 6.7%, which is also what March's year over year was. So we came in higher than expected and than the previous month. June 1st is the next Bank of Canada interest rate decision, and a 0.5% increase is widely expected. The lockdowns in China are continuing the supply chain issues like delivery lags or vendor performance. The zero tolerance policy for COVID is causing the issues. The risk of recession in North America is increasing. On Thursday, the US weekly jobless claims rose to 218,000. Inflation in wages is mostly in the low pay jobs and in services. Businesses are replacing labor with capital, for example, self-checkout kiosks in the grocery store. The US consumer spending came in lower than expected on Tuesday as well, at 0.9% increase versus 1% increase, which was expected and is beginning to moderate. The economy is slowing in the US, but unlikely to go into a recession at this point. Some experts look at 2024, which totally disassociates the recession with what the central banks are doing now. Others think slow US growth and persistent inflation with the possibility of a recession and inflation in the US is a possibility. The strong jobs market in the US especially should prevent a near recession, but could adjust and a recession could happen later, perhaps in 2023. Both central banks are talking tough on inflation to produce a reduction in demand without having to actually raise interest rates. This is called quote unquote job boning inflation down. Higher interest rates get translated to new bonds having a higher yield, having bonds become a credible alternative to stocks as investments. So the central bank rate increases are actually helping bonds become a plausible investment. On Tuesday, Walmart had an earnings miss and lost double digits in percentages of their stock price. And Wednesday, inflation concerns caused US retailers like Target to be down 25% and Costco down 12% due to the impact on the consumer. Walmart lost another 6% on Wednesday. The quarterly reports had large misses in profit margins due to inflation and increasing costs, causing the sell-off. Next week, the Canadian banks are reporting. BMO, BNS, and Nvidia on Wednesday, Snowflake, Baidu, Alibaba, TD, Royal Bank, and CIBC on Thursday, and we have Dell, Canopy Growth, and Canadian Western Bank and National Bank reporting Friday. Looking at economic events next week, Thursday, the US initial and continuing jobless claims are being reported, as is the US GDP. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.